have Mr. Renuke Wijayawardhane, Chief Regulatory Officer of Colombo Stock Exchange with us to provide insights into the CSE's new developments. Hi Renuke.
Hi, thank you for having me.
Renuke, over the years, the CSE has broad-based its listing framework. Could you elaborate on this, please?
Yes, definitely we have done that. Before that, just to give a bit of a background to this, now Colombo Stock Exchange is licensed by the SEC as a market institution. Now under the SEC Act, there are certain objectives which are assigned to market institutions like the exchange. One of the premier objectives of setting up a market institution is basically to maintain a fair, orderly and a efficient market for the protection of investors. That's the premier objective. But flowing from that, there is another fundamental purpose as to why an exchange would exist in any country, which is, in addition to maintaining a secondary trading platform for the trading of securities in the secondary market, we have to facilitate capital formation by corporates.
Right.
We have to basically enable issuers, meaning listed companies or unlisted companies, to raise capital via the stock exchange and list their shares, bonds, maybe other securities. Because that's what creates broader and deeper markets. That's what enables the listing framework, enables companies to raise capital.
Right.
On the other hand, it also enables investors. It gives them a multiple choice. They can pick either shares or bonds or any other products. And so they have a wide range of investment options. So it works both ways. So if you don't facilitate capital formation, what happens is you will not have a investor base to protect.
Yeah, you
actually.
won't.
Yeah. So actually the starting point of any efficient capital market is to broad base the capital formation by issuers. So we have understood that objective very well. So to get back to your question, yes, definitely we have broad-based our listing platforms and listing boards, especially over the last 7 years, 6 to 7 years.
Okay.
Now, just to give an example, earlier, if, say about 10 years ago, we only had a main board and a Dirisavi board, that's all.
Okay.
But we realized that that is not good enough, because there are new businesses that are emerging, market dynamics are changing.
Oh yeah, it's like completely changing.
Exactly. So we can't be holding on to the archaic set of rules, because we had to fine-tune our regulatory framework to attract these guys to come on board.
So true.
So what we did was we divided our listing main segment to main market segment and an alternate market segment.
Right.
In the main market segment, we gave multiple options. For example, to list on the main board, earlier it was a must that the issuer should have profit for the last 3 financial years.
Right. Okay.
So we slightly changed. We gave different other options.
Okay.
In addition to profit criteria, we basically identified 2 other criteria: revenue-based criteria, then cash flow-based criteria. So that gave issuers multiple options, and we are happy to say that, especially in 2021, we actually got 2 issuers listing solely because of this.
If not, they wouldn't have.
No, they wouldn't have come.
Oh.
Right. So that was on the main. So
Right.
in the main market segment, we have the main board and Dirisavi board. Dirisavi board criteria was also expanded accordingly.
Dirisavi board.
Dirisavi board.
Okay.
So that's the main market segment. So then about 6 years ago, the first listing board in the alternate platform, alternate market segment, was the Empower board. That is for the small and medium sector enterprises. So that has less stringent listing requirements.
Right.
So we are happy to say that already we have about 5 listed companies. Of course, there's a lot more potential there. So we have separate unit handling that, getting more issuers on board. So hopefully it can be further expanded. Then we have also introduced a segment for foreign companies to list on the CSE.
Right. Right.
So far we haven't got any listing, but we are ready. So that's also in the alternate market segment. So listing will happen.
It's not executed yet, but you have in the pipeline.
The framework is there.
Right.
Basically,
I'm sure that's going to be really.
So we were targeting
promising,
certain jurisdictions. We were having a lot of negotiations, and so far we haven't got a listing, but hopefully it will happen. Now that listing will happen not in rupees, it will be in USD.
Nice.
Then even for local companies, locally incorporated companies, we have very recently, about 2 years ago, we worked in consultation with the central bank. Central bank had to put out certain regulations. It was gazetted. So the local companies also can raise capital via issuance of securities. It's another class of shares, not the same class. Not through LKR, but through dollars. So that's also there. So that's a further expansion. And recently, last year, we also introduced under the main market segment another board basically called Catalyst Board.
Catalyst
Board,
okay.
where the state-owned enterprises can be listed.
Okay.
Right, because we realize that there will be expansion, and the governments might seriously look at listing some of the state-owned enterprises.
Right.
So we understood that they may not be able to list based on the existing criteria. Right, it would have been challenging.
Of course.
Yeah. So, but we were not compromising to a greatly, but we gave multiple options, and so those are set out in the rules. So that all those things were done in order to attract these
so you
different.
See them working. The new things are working. Correct. Already
yes,
in motion.
Yes. Working, but of course, a lot more to be done. We need to get issuers on board, and so that's the way forward. So we will continue to do so. And for example, now another thing that we can do in the future is to target certain business segments like IT sector, for example, which is not very represented in this Colombo Stock Exchange. So maybe we are willing to look at that also. So to answer your question, yes, we have done a lot during the last, especially the last 6-7 years, and we'll continue to do so.
So in addition, can you also explain the capital raising mechanism introduced by the CSE via new products?
Yeah, that's another thing that we have done, especially again during the last 5 to 6 years. So CSE was identified as an equity exchange, basically.
Yes.
We are primarily an equity market, cash market. We have a bit of bonds, debentures also, but that's not good enough. So we need to expand on our product range. So with that objective, we have done a lot during the last 6 to 7 years. Just to give very briefly, just to give some examples. So we trade bonds in the trading system, but there was a need to have a repo mechanism, repurchase mechanism for listed corporate bonds. So it was a bit challenging to do that in the normal trading system. So we developed an alternate trading system called OTC platform.
For the repo transactions
exactly,
only.
yeah.
Okay.
And we introduced a separate fee structure also for those, right? So we have done pretty much everything that is possible. So the repurchase transactions are quite possible among certain identified categories of investors through the OTC platform. So I wouldn't say it's a product, but you can actually say it's a product because it's a new trading mechanism where the same listed corporate bonds can be traded through another platform, which is developed by us actually. Okay. Then SEC a few years ago amended the prevailing rules, which was the Unit Trust Code. Now it's known as the Collective Investment Schemes, to facilitate REITs, real estate.
Unit Trust, now it's Collective Investment Schemes.
That's the new name, right? So that's the law. So under that, REITs were introduced. REITs means real estate investment trusts. So which is a sort of a pooled investment. Primarily the rules were changed by the SEC, then piggybacking on that, we did the listing rules, and we are ready to accommodate that product also. There are certain challenges.
About to go live.
Yeah. No, so all these things are implemented, but we have not got a listing there because there are reasons for that. Considering the time, probably we can't go into such details. There are tax issues which are sort of, it's a bit of a discouragement there. Then we also introduced stock borrowing and lending. I'm sure you would have heard about it. That was about a year ago.
I think approximately a year ago. Yeah.
So that's an exciting arrangement. It was done entirely by the CSC in consultation with the SEC. Of course, we have a joint product committee with the SEC and CSC. So most of these things were
always discussed,
spearheaded by correct. And
the steering committee running.
That's right, at the highest level. So the process was made very faster because of that. So we have done changes to the trading systems and the clearing system. It actually stock borrowing is done through the CDS. Short selling is done through the trading system. So there are two things: stock borrowing and lending and short selling. So we have gone live with that. There are some transactions happening. That's a very good product to be used by any investor, especially in a downward market situation. Right? So that's our duty. So we give multiple options for people to decide. Nobody is forced into do anything. Absolutely. So that's another product. So if I may continue, we have introduced several debt products to expand on the traditional plain vanilla debenture market.
Right.
So starting from Basel III compliant debentures to green bonds. Recently we had the first listing by DFCC Bank, right?
The green bonds.
Green bonds, then blue bonds, then there's perpetual bonds. Perpetual bonds are basically, it's a bond which doesn't have maturity date, right? So we have restricted it only to banks at the moment, and the investor.
When was the perpetual bond introduced?
Last year, right? So we have a listing. It's actually a hybrid listing.
Right.
So a bank could make use of that, depending on the interest rate regime, they could do that. Then we have infrastructure bonds, we have the framework. Then very recently we also introduced high yield bonds. High yield bonds are the bonds which can't meet the mandatory minimum rating requirement. So that's like a bit of a...
Have you seen an influx of companies listing
we just actually got the approval about a month ago. So that...
But I'm sure it's that's got to be a bit of an interesting
absolutely, because
product.
A company which can't get the minimum rating, we call it the hurdle rating, can go for this. Of course, the investor segment is only for qualified investors because it's a bit of a risky product. So that's our approach. So we are not going to stop anybody from doing this as long as the risks are identified. The pre-identifiable risk we tell the market, and it's up to the market to decide
how what to do.
What we should protect the market is unidentified risk, the risk that they are not prepared to go into. So that's a bit of a risky thing. But now this type of product, the sophisticated investors are aware of it. So why prevent it?
Renuke, the Securities and Exchanges Commission, the market regulator, and the CSE, the market operator, have introduced this revised corporate governance framework, correct, for the listing companies, introduced the major changes. So can you explain what are these changes exactly?
Yeah, so till last year, these rules were issued in October last year. Most of the rules were applicable on a staggered basis. And the final 2 rules will be applicable from 1st Jan next year. So it's done on a staggered basis. So before that, the rules, corporate governance rules, what we had was introduced in 2006, 17 years ago.
Wow.
So it hardly went through any revisions. So there are fundamental changes introduced through these rules. Very briefly, there are lots of new concepts that have been introduced, a lot of new obligations that have been created, starting with the minimum number of board directors, minimum number of independent directors, which is 1/3 of the total board. Then there's a concept of dividing the roles between the chairman and the CEO. If both positions are held by one person, there's another additional.
Where the demarcation happens.
So there is an additional requirement to have a senior independent director. In fact, there are 3 circumstances under which a senior independent director is necessary. So these are all new rules. There are new provisions relating to alternate directors because it's previously we didn't have a rule on that. So under the new rules, it's supposed to be under exceptional circumstances, only for 1 year. There's a new committee, new board subcommittee that is required now, effective from 1st October, it's now effective, called the Nominations and Governance Committee, which will look into the appointments and reappointments of directors.
It's an independent sort of a committee.
To maintain the independent. Of course, it should be chaired by independent director, and there has to be at least 2 independent directors. Other members can be non-executive. You can't have executive directors in that committee. And that committee is given the task of basically ensuring the corporate governance, the compliance with the corporate governance. That's a new committee. Then also there were certain other expansions of duties to audit committee. Composition was changed, then remuneration committee composition was changed, related party transactions committee again.
So all these things changed over the period of last 17 years. Now only we actually did the changes, material changes.
So these changes are effective from October. These are the new rules I'm talking about. These were not, although some of the committees were there under the previous rules, also, but there were certain expansions created through this.
And now it's like set in, like all done and yet to set put to motion.
So then there is a fit and proper criteria. In fact, that is necessary under the SEC Act. SEC Act said that, has stated that listing rules must have provisions. So there's a fit and proper criteria applicable to all directors and CEOs of listed companies. Then we have expanded and tightened criteria for independence of directors. There are certain new rules that have been brought in.
So if I may just interrupt you there, the fit and proper, what will happen if by any chance something happens after the listing? A particular director did not come into that fit and proper framework. How do you identify it, or how does it work?
So basically the director will have to make a disclosure.
If that happens.
If that happens, because there are certain multiple scenarios under which this can happen. Only he will know. Listed company also may not know. So it's not a case. It's his responsibility. Of course, you can't monitor 365 days. So it's up to so that's why we have had a lot of sessions for listed companies. We have told the company secretaries to follow up on some of these things and make the board members aware of these issues.
Have you already given as a covenant to monitor by any chance? Is this a covenant to monitor for?
So rules are the framework. Every listed company must have mechanisms to ensure compliance. So just to answer your question, if some person is does not meet the criteria, he's not eligible to function from that day.
That day onwards.
Yeah.
Like stop.
Yes.
Okay. All right.
So, but that has to be flagged to the board, and
there's a personal responsibility attached to each director that comes.
Basically, disclosure requirements under the new corporate governance rules. There are disclosures to be made in the annual report. There are some immediate disclosures also about some of these committees.
Correct.
So all these are new requirements, and there is also some level of enforcement actions that has been brought about. So these are, in a nutshell, these are the changes that were introduced under the new corporate governance rules. Everything else is in place except for 2 rules, which are which will be effective from 1st Jan next year.
And how effectively has the CSE enabled these disclosure of information by the listed companies?
Yeah, so I mentioned at the beginning that we have a statutory duty to maintain an efficient market.
Yes.
Now, what efficient market is, the exchange must ensure that the securities that are traded reflects all information relating to those securities.
Correct.
Now, information primarily comes through disclosure by listed companies. So it's an absolute necessity. So we have ensured in multiple ways, starting from the point of listing. So when you list a company, there is a document that is dished out to the market called prospectus. Or if there's a capital raising or an introductory document, there's a whole heap of information about the issuer.
Correct.
Much more extensive than what is required under the normal law, under the normal Companies Act. So those are all part of the CSE listing rules. Even after listing, on a continuous basis, the company has to give a lot of information. For example, there are standard routine information like the annual report, quarterly statements, directors' transactions, disclosure, changes to board members. So those are standard ones. In addition to that, there is a requirement to disclose material information.
Right.
So every listed company gets this kind of situations. So there could be something that is happening which has a material bearing on the share price of the security.
Yes, definitely.
So you have to immediately disclose.
Right.
So we can't give a set criteria for that because it's very subjective.
It's subjective and a sensitive.
Correct. Yes.
Issue.
So we have the framework. In fact, SEC Act also has certain provisions on this. So we have been strengthening these requirements. We feel that it's pretty much on par with the regional markets.
Right.
So those are the requirements, and you can't only have requirements, you have to have some level of enforcement also.
Yes, true that.
And there is some new provisions that has been introduced
on this
enforcement extending to even imposition of fines on board members.
So this enforcement in relation to this non-compliance with listing rules, why was this done and what are these new provisions?
So that's done exactly due to the reason I mentioned. You can have all the rules.
But then,
I mean, it's not a big.
That's the main reason.
It's not a big job to get the rules. You can copy rules from another market, but if you don't enforce it, that's
the primary reason for it. Okay.
So now, for example, under the SEC Act, SEC actually sent a directive last year, identifying certain instances where multiple enforcement options were given to the CSE board, including the ability to fine directors of listed companies. For example, if the annual report is not given after a particular period,
conditions are not met.
Quarterly statements are not given, material information is not divulged. So there is a process now which includes fining, imposition of a penalty on the directors, right? And under the new corporate governance rules also, if there are certain disclosures which are not made on a timely basis, there could be repercussions. So I would say it's very effective. Now earlier there were listed companies who were not giving some of the basic reports for months and months. So earlier the enforcement regime was transfer of securities to the watch list. There's a thing called watch list. So it's like a red flag. Then after a particular time period, suspending trading, and then eventually delisting. Only those 3. But we have felt that it's not effective enough, because when you suspend securities, you are actually penalizing the shareholders.
Very true.
So the
it has ripple effects eventually.
People who are actually accountable has to basically be made aware of this. So I would say that it is very effective. Now, for example, 2022 and 23, some companies had not given the annual report. So when this directive came, we sent notices. So immediately, majority of the companies started complying all of a sudden. So that's because of the enforcement ability, right?
Otherwise, they wouldn't
have. So we are assisting the investor base to get the information on a timely basis.
Plus, I'm sure for the bank regulations, since I was an ex-bank, I know the pain also we go through in terms of getting that information from the client for us to even fund it, monitoring internal covenants and conditions. If that's not done, that's another ripple effect on the financial lenders they're going to face. So,
So here the duty is actually investor protection.
Yeah.
So investor protection means you need to submit information.
Yeah.
Otherwise, how on earth are they going to place their buy orders and sell orders? They should know the exact situation relevant to the listed company.
Very
Otherwise, there will be a gap in the level of knowledge. Listed company and the related parties know more about the company than anyone else.
Correct.
So our duty is to bridge that information asymmetry, as we call it. So we may not be able to do 100%. So these are little steps in the right direction.
Got it.
Enforcement is necessary to ensure that they comply. Listed companies comply with the rules.
Yeah.
So it's not applicable. The fines are not applicable to all the rules. There are certain identified rules. If you
to ensure that thing is enforced properly.
Correct.
Got it. Recently, there was a decision by the CSE to reduce the settlement cycle to T+2. Can you explain the rationale behind this?
Yeah. So earlier we want T+3.
Yeah.
So you trade today, and the settlement of money and the exchange of securities happens on the third market day. So we have now reduced it by 1 day. Now it's T+2. So there are multiple benefits arising out of this initiative. So earlier we were on T+3 settlement cycle. So T+3 means you exchange your assets, you settle funds and obtain securities on the third market day after trade day.
Yes.
We have reduced it by 1 day. Now it's T+2. There are so many benefits arising out of this. First one is when you trade, and from the trade day to settlement day, there's a risk exposure to both parties, buyer and seller. Buyer, there's a risk of not getting the securities. To the seller, there's a risk of not getting the money. So when you have a longer period, the exposure.
3 days you had to wait eventually.
Longer the period, longer the exposure. So when you narrow it down, you are curtailing the exposure. That's the biggest advantage.
Mitigating the risk.
Yes, mitigating the. Ideally, it should be T+0, but I don't think any market can go to T+0. So the international benchmark is pretty much like T+2 now. So we are on par with some markets are actually moving.
Did you see a difference from T+3 to T+2? Since when that you saw that time?
Recently, we introduced it recently, a few months ago. So let me explain the benefits. There are some additional benefits. Now, for example, when you have a longer settlement cycle, you have to wait that much longer to receive money.
Right.
Now, when you shorten it, you get money faster. So your turnaround time for further transactions also increases.
Yeah, of course.
And the liquidity improves, right? So otherwise you have to wait for, what if it was T+7? So you have to wait for the seventh market to get money.
Will go for
So now ideally it should be narrowed down to even T+1, but there are practical issues. Practical concerns are there. If not for that, we can do that also.
Any markets right now operating in T+1?
T+1, I think India is on T+1. They are thinking of T+0.
Wow.
So, but the country's
practicality of
so country's payment infrastructure also should support that.
Yeah.
It's not only the
when do you think Sri Lanka will move to that?
Probably T+2 is adequate for the time being.
Okay.
T+1 can be challenging, especially considering the foreign investors. There could be some communication issues involved in the custodian transaction.
So right now T+2 is the most realistic target that we can set.
It's very practical, and also it's very pragmatic, and also it's in line with the benchmark. There are other advantages. To the brokers, now when you have a longer settlement cycle, they are required to keep margins. So for every trade, there are margining requirements.
Correct.
So you have a longer settlement cycle, your margin requirements, you have to hold on to margins in a longer way. But when you narrow down the settlement cycle, so margins, once you settle, margins can be released back.
Exactly.
So they can better
the rotation
utilize.
Also happens.
They can better utilize their capital. So that's another advantage.
Yeah.
And operational efficiency. So there are more than one advantage actually by reducing this settlement cycle. That's why we did that.
Thank you, Renuka. I think we've got a lot of insights into the CSE's new developments. Stay tuned with us for more details.